Hi, everybody, and welcome back to FANG Saturday. This is Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. We had some issues with our internet yesterday and were unable to record FANG Friday, but we're giving it another go today. Well, if you missed it, I was on BNN Bloomberg yesterday for a market review, on Thursday for a market review and update, plus anything else that they had in mind. And I had promised you last week that I wanted to put the stock market in context. And that critical context is that the Standard & Poor's 500 was closing in on a valuation which it last attained way back in the year 2000 at the market peak back then. That top was its low super growth price, or 4.5 times book value. As of yesterday, when we ran the weekly figures, it has a little bit less than 5% to go to reach that breakpoint level. At the same time, the NASDAQ 100 has been rallying back up from its recent lows following its hit a 19% setback when it rose smack up against its HB1 price. That's 9.5 times book back in July, August. I observe from what I can see that the NASDAQ is likely to get back there again. Well, that's less than 5% away as well. So we have the intriguing circumstance in which the two major North American U.S. indices, the NASDAQ 100 and the Standard & Poor's 500, are within a very short striking distance of what may be twin market tops. Now, last week I said I would be giving BNN viewers those precise target prices for those indices when I was on Thursday. And I asked you to please tune in, as we very rarely get those two indices perfectly corroborating each other. I, for one, I'm very curious to see what the outcome is going to be this time around. Are they moving towards a perfect market top? Or is this a move that is preparatory to a breakout, which would be, in a very real sense, intriguing if astounding, given the extreme valuations of both of those two markets? Well, my BNN host, Amber, had other ideas as to what to feature on Thursday, and my plan to let BNN viewers and you know what those precise targets are went unanswered. However, a promise is a promise, and so today I will provide those targets for you after my weekly individual FANG stock review. So without further ado, let's take a close look at the FANGs for this week. As always, before I do that, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, starting off with NVIDIA. Look at that. It's just been, well, bumping along its HB7, unable to break out and head back up to its absolute top at its HB8. And I kind of have my doubts that it'll be able to do that unless the market itself can break out. However, we'll have to see. It has been stalling here. Microsoft has been, in a sense, going nowhere, and in fact, recently, with the market strength, if anything, Microsoft has been sort of fading away a little bit. And by the way, Alphabet hasn't exactly been any ball of fire either. So add those together, and then let's throw in Amazon, which has been moving sideways, just riding its bubble price and barely hanging on. So we have what we might call kind of the three AI platforms here, which are essentially really going nowhere. And so it's small wonder, therefore, that NVIDIA is not breaking out strongly and heading for its old peak. Apple, look at, if I just lay my cursor there and you can see the dotted line there, you can see that Apple has been holding right in there. Now, the balance sheet has been rising lately, but you see actually that the stock is set back towards its HB6 price. And if it does not hold here, then I don't know what's going to happen. Remember, however, that this is a company where the sales and earnings are not growing. And at the same time, we have a market cap of $3 trillion and a valuation that is 55% higher than its fair market value. I, for one, am very, very cautious about Apple. Very cautious. Now, Meta is kind of almost an outlier among the FANGs, because I showed you the long-term chart going back to 2017, where the stock hit its bubble price 3 times, collapsed, went back up again, but has now broken out on the big recovery, okay, in earnings and the fair market value. It would strike me that if this market can get to those market peaks, we're likely to see that Meta might well reach its HB1 price. That would be a brand new long-term high. Tesla had a nice rise, hit its HB2 and has set back. It had a nice day today, or yesterday, sorry, up 9 points. But again, we look at the fair market value, which is just kind of flatlining, and also, by the way, look at its fair market value, which is some 77% below the current price. And we do have to wonder what is going to happen to Tesla. I, for one, am not bullish, and I'm very concerned. Finally, Netflix continues to bump up against its HB2, and that is 12 times book value. It has been higher by a couple of breakpoints there, which would give you an increase of almost 50% if the stock can break out here. However, first it has to break out, and it has been very reluctant to do so, partially, I suspect, because the growth of the fair market value has been fairly tepid, positive, but fairly tepid. So, to review and recap, first, I promised that I would give you the twin targets for the NASDAQ and the S&P, as they are likely to be critical to what happens in the market. To start with, the NASDAQ 100 has now peaked twice at 9.5 times its adjusted book value. The first time in 2022, and the last time very recently in mid-year. Our precise market target as of Tuesday, October the 1st, was 20,975. And that is growing at roughly 10 points a week, in line with the ongoing balance sheet growth of the NASDAQ components. So going forward, keep that in mind. As far as the Standard & Poor's is concerned, reviewing our market valuation history, that index is also very extended. Indeed, the S&P has not been this expensive since the peak of the dot-com market in 2000, when it peaked at 4.5 times its adjusted book value. That market target, as of last Tuesday, was 6,030, and it is growing at roughly 4 to 5 points a week, in line with the ongoing balance sheet growth of the Standard & Poor's components. By the way, if you're curious as to where the NASDAQ was back in 2000, well, so am I. We didn't start to calculate the NASDAQ 100 until the mid-2000s. So mark those down and keep a record along with the weekly point increases needed to get there, and be prepared to act. Now, reviewing the individual FANG stocks in this light, off the top, could NVIDIA break back out over its HB7 price, that's 44 times book value, and head back to its peak? I think that the overall NASDAQ would need to break out to do so. Amazon has already broken out, but actually broken back out is more the reality. I would probably hold, as your real investment risks are fairly low right now. And why do I say that? Because if the bubble price does not hold and the NASDAQ has reached its peak, then a sell is likely in order. Microsoft is very non-committal right now in the middle of two breakpoints, and that's how I would treat it. A coin toss, which is a poor way to invest. Muddling Meta, my term for Meta now, remains indecisive, but also remains a hold. It looks to me as if it would like to go higher still. Maybe if the NASDAQ reaches back to its HB1 price, Meta will go the extra mile to its own HB1 price. From the point of view of pure technical analysis, Apple would be a hold, with the hope that it can break out from its current flat trend. From an SVA point of view, I would still rather be in Poughkeepsie. The overall market may well give us the marching orders for this stock, and I would wait to act. By that means either way, sell or buy. Tesla was dead up to its HB2 price, that's 12 times book, a key SVA breakpoint, but is setting back now. I had remained bull-headed and maintained a sell on the shares even when it went up to its HB2. This week, clearly, I'm in the right camp. Finally, Netflix is trying to break out over its HB2, 12 times book, and head back to its all-time high, which is a couple of breakpoints higher. I keep saying that the proof of this pudding is in the breakout, but I also suspect that the leadership of the NASDAQ will be crucial going forward. Anyway, that's all for this week. For now, this has been Ross Healy, the Chairman of Strategic